Welcome back, stakeholders, to this explainer. Today, we are absolutely unpacking Alphabet's massive Q1 2026 financial results and really diving deep into their enterprise AI momentum. I'm thrilled to be guiding you through these numbers. We've structured this as a professional analyst briefing because, frankly, we have a ton of phenomenal data to get through. We're going to look directly at how Alphabet's massive investments are literally translating into real-world, institutional-scale success.
Just a quick housekeeping note before we get into the weeds. Please remember that this video is for educational purposes and not financial advice. We're simply taking a structured, objective look at the data provided in Alphabet's official Q1 2026 earnings release to understand the mechanics behind their performance.
All right, so here is our roadmap for today. We'll cover the macro financials, the Google Cloud and AI surge, Gemini API volume, capital allocation, forward-looking risks, and finally, the broader market outlook.
Let's jump right into Section 1, Macro Financial Highlights, focusing on their top-line beats and the EPS surge.
The sheer scale of what we are looking at here is just remarkable. We are talking about Alphabet's 11th consecutive quarter of double-digit growth. Consolidated revenues reached a staggering $109.9 billion. That represents a 22% year-over-year growth rate. To put that into perspective, we're looking at an enterprise generating well over $100 billion in a single quarter. It just reflects an incredibly strong performance across the entirety of their ecosystem.
But get this, it actually gets even more impressive when we look at the bottom line. Net income surged by 81% year over year, hitting $62.5 billion. Parallel to that, diluted earnings per share increased by 82% to $5.11. And this absolute bottom-line explosion happened alongside an expanded operating margin which grew by 2 full percentage points to 36.1%. That margin expansion is absolutely crucial because it indicates Alphabet isn't just growing their revenue, they are scaling their profitability with immense efficiency.
When we break down that revenue across the core segments, you see steady growth in search alongside some truly explosive cloud expansion. Google's search continues to be the bedrock, right? It grew 19% to over $60.3 billion, with new AI experiences really driving user queries to an all-time high. YouTube ads grew a solid 11% too. But the real story? Google Cloud. It jumped from $12.26 billion to over $20 billion. That is a blistering 63% year-over-year growth rate. It's a real game changer.
Which brings us to Section 2, the Google Cloud and AI surge, and that unbelievable $460 billion backlog. This is exactly where Alphabet's narrative permanently shifts from just being a consumer search engine to being an absolutely dominant enterprise infrastructure provider. Alphabet CEO Sundar Pichai hit the nail on the head here. He explicitly tied these outstanding results to their differentiated, full-stack approach to artificial intelligence. He noted that these AI investments are, quote, lighting up every part of the business.
So that full-stack strategy drove a highly meaningful acceleration in Google Cloud. As we noted, revenues spiked 63% to $20.02 billion, and that was heavily fueled by enterprise AI solutions. Alphabet specifically pointed out that this surge was led by increases in the Google Cloud platform across enterprise AI solutions, AI infrastructure, and core GCP services. They are unequivocally capturing this generational shift toward AI compute.
And then there's the backlog. The cloud backlog nearly doubled quarter over quarter, sitting right now at a massive $460 billion. Let's think about what that tells us as stakeholders. It means institutional commitments are cementing. Enterprises aren't just out there casually experimenting with Google Cloud's AI infrastructure anymore. They are signing massive, long-term contracts to build their core operational futures right on top of it.
Let's move on to Section 3, Gemini API and token volume, to see exactly how they are scaling enterprise AI.
You know, as professional analysts, we don't just want to look at the revenue. We want to see the underlying usage data that guarantees future revenue stickiness. Well, customer adoption of their first-party models is accelerating incredibly fast. Direct API use is up 60% from just last quarter. This metric is vital for us. It proves that developers and enterprise customers are actively and aggressively integrating Gemini directly into their own daily operational applications.
But the sheer volume here is what really blew my mind. Gemini models are now processing over 16 billion tokens per minute. Literally, stop and think about that scale for a second. 16 billion tokens processed every 60 seconds via direct API use.
To even attempt to provide that reliably requires a level of computational infrastructure, liquid cooling, and network optimization that maybe only 2 or 3 companies on Earth possess.
And that technical scale, it's beautifully mirrored on the commercial side. Gemini Enterprise saw 40% quarter-on-quarter growth in paid monthly active users. So this perfectly illustrates the translation of technical capability right into recurring commercial revenue. Enterprises are clearly finding real, measurable, bottom-line ROI when they pay for premium Gemini access to drive their workforce productivity.
All right, Section 4, Capital Allocation and Strategy. How exactly are they funding this full stack?
Look, you simply cannot process 16 billion tokens a minute without unprecedented capital investment. We are seeing incredibly aggressive deployment of capital here. We're talking over $35.6 billion in CapEx, specifically purchases of property and equipment, and another $33.6 billion in acquisitions. This immense outflow to secure future infrastructure and top-tier AI talent is just brilliantly balanced by their treasury strategy. They issued $31.3 billion in senior unsecured notes. Honestly, this is a masterclass in leveraging a rock-solid balance sheet to just outspend the competition.
But meanwhile, they haven't forgotten about returning direct value to the shareholders. They announced a 5% increase to their quarterly cash dividend, which now sits at 22 cents per share. It's a remarkable dual-engine strategy if you think about it. They are pouring roughly $70 billion into CapEx and acquisitions in a single quarter to fund this AI infrastructure war, all while still growing the dividend for long-term institutional investors.
Moving to Section 5, Navigating Forward-Looking Risks. We need to look closely at market dynamics and FX impacts.
Okay, reality check time. While the headline numbers are exceptional, a thorough analysis requires us to look at the non-core factors that drove the bottom line. Alphabet explicitly noted that their massive $36.9 billion net unrealized gain on equity securities is subject to market dynamics. That means it could significantly contribute to volatility in future quarters. Let me be clear on why this matters to us. This gain alone increased their provision for income tax by $8.2 billion and boosted net income by $28.7 billion. As investors, you absolutely must model for the fact that this specific equity valuation bump might not repeat.
Additionally, when you exclude the effects of foreign exchange rates and hedging, their constant currency revenue growth was slightly lower at 19%. This demonstrates the very real impact of international currency fluctuations. A 3% gap driven by foreign exchange is a massive chunk of change at a $100 billion scale. It's a crucial reminder for all of us that as a truly global infrastructure provider, Alphabet remains exposed to macroeconomic currency winds completely regardless of their technological dominance.
Finally, Section 6, Conclusion and Market Outlook. Let's talk about how this is reshaping 2026.
Alphabet is essentially proving right now that their full-stack approach, meaning they own the models, they own the cloud infrastructure, and they own the massive enterprise distribution network, is creating an unstoppable flywheel effect. With a $460 billion cloud backlog, they have secured a phenomenal, reliable revenue pipeline for years to come. They aren't just participating in the AI revolution anymore. Through their unprecedented capital expenditures and integrated hardware deployments, they are actively defining the boundaries of it.
Thank you for joining us for this explainer. I want to leave you with this final provocative thought. With a $460 billion cloud backlog and tokens processing at 16 billion per minute, how will competitors possibly respond to Alphabet's massive, fully integrated AI ecosystem? Let us know what you think, and please like and subscribe for more videos.